everyone. Welcome to ezyCollect's webinar on maximising profit and cash flow, planning for the new financial year. We've got a wonderful guest with us today, Sue from CFO On Call. I'll just give us another minute to a minute and a half before we start, just to give people time to join. Now, we did run into a couple of technical issues with Sue's camera. So unfortunately, I don't know if we'll be able to see her face today. Hey, she's here. Yay, forget that. Hello.
It's lovely to be here.
Yay. Wonderful. Okay, well, perfect timing. So let's kick off with a couple of housekeeping points. So for everyone who's here today, this will be a listen-only webinar. However, if you have questions, please put them in the chat box and we will go through them at the end. This will be going for about 45 minutes and we will have time for a live Q&A after the presentation. So a little bit of introductions for who's who in the zoo today. So our special guest is Sue Hurst, the co-founder of CFO On Call, an absolute business whiz, knows everything there is to know about good business management, and especially in terms of like financial management. And in terms of who I am, so if any of you have done a demo with ezyCollect, you may have spoken to me already, but I am the account executive that's been here for quite a few years. So if you would like to have more in-depth chat with me after this meeting, I would love to chat with you again as well. So what are we going to be talking about today? So there's actually quite a lot to cover. So we're going to be talking about sort of the gamut of what's involved in maximising cash flow and profit. So starting with like the sales and gross profit analysis, talking about cost optimization, how to best price your products or services, how to make sure that you are accurately understanding what your real overhead is. How can you then streamline the payments and the flow of money through your business? So whether that is customers paying you or whether that's you paying your suppliers, how can you streamline that as much as possible? Also, how can you minimize inefficiencies in stock management, making sure that you don't have overstock, but also that you've got enough, and making sure that you're removing inefficiencies from your job management process as well. So really is a very broad-ranging topic that we'll be going through today, but Sue's got some really great pearls of wisdom to share with us today, so you're in for a treat. Okay, so let's start off with talking about sales. So, I'm a salesperson, and sometimes for me, it's easy to, just be focused on the sales side of things, and I don't often think too much about the cost side of things, and that's something that I, unfortunately, it's not necessarily my job to think about too much. But what should like business owners or CFOs care about when it relates to costs?
Well, I guess every business owner is busy chasing sales, and that's obviously important because if you don't have sales, you don't have a business. However, what we find often gets ignored is what's actually left over from the sales by the time you've paid for everything. So that includes the costs to create the sale of the product or the service, whether that be, buying widgets and getting them into and out of store, running projects or jobs, managing labor and materials and everything that goes on in a job. And then on top of that, you've got your regular overheads. And oftentimes we see that at the end of it all, you can sell $100 of something, and in many cases we see very little on the bottom line at the end of all the effort. In fact, in many cases, even worse, we see less than nothing. So that's why I think it is a very high value proposition in getting a really good, clear understanding of what everything is costing in your business. I have a saying, it's not just about the turnover, it's about the leftover.
That's a good
So, you
point.
know, for a business owner, you're busting your guts to do all of this, to run your business. And at the end of the day, you want something left. So,
Yeah.
you know, it's an area that really needs attention right from the word go.
That's a good segue into sort of how to actually do that. So what would you say is like the best practice for conducting an analysis of gross profit?
Well, you know, one of the best ways, and what we see happens a lot in small businesses, in their accounting systems, they just lump all of their sales into one account. So they don't have the ability to be able to analyze the sales and the profitability of different kinds of sales. So different kinds of products or jobs or services or customers or divisions or, you know, things like that. And the reason that, and they're generally referred to as profit centers. And the reason that that's important is because there may be some areas in the business where you're quite profitable, and that's great. But then there are other areas in the business that are not so profitable, and some that, worse still, might be making a loss. So they are detracting from the ones where you're making profit. So, you know, you're going sort of up like this and down a bit. So you really want to be able
Yes.
to analyze, okay, you know, what can we do to sell more of these items that are profitable, and or what can we do to either eliminate these ones that aren't profitable or find ways to make them more profitable, so
Mm.
that you're not, you know, you're not mortgaging the ones that are profitable with the ones that are not.
Yeah. So do you need a like any special tools to do this kind of analysis, or could you do it just with your existing accounting system?
You can do it with most existing accounting systems. Most systems have some function. I can't remember exactly what it's called in Zero, but maybe categories or groups or something like that. So, you know, if you've got a good bookkeeper or CFO, get them to have a look at it for you and set it up for you so that you can easily identify you know, the difference between those different types of sales. So what you want to track is the sales and the costs against those sales. So you really need to separate them out into, again, what we call profit centers. So if anybody wants to look up a bit of information about profit centers, that's the general terminology that's used to describe that.
Yeah.
And I guess the other thing, you know, it says here identify opportunities. And this is the other thing in business that, you know, we sometimes get a bit distracted by this next bright new shiny thing, which is great. You know, we all need to be looking for opportunities. But the key thing is to ensure that those opportunities are actually going to be profitable.
Mm.
And so it's really important to crunch the numbers on whatever it is you're undertaking. You know, we see it quite often where people take on big jobs or projects and they get all excited by the size of it, but then they haven't actually crunched the numbers in terms of not just the profitability, but the cash flow impact of that.
Mm.
Because if you don't set it up right, you know, you're laying out all these expenses for labor and materials, and if you haven't got a deposit from your customer or you're not getting progress payments, you have to fund that project until the end when your customer pays you. So question is, where does the money come from? And
Yeah.
it's the same with some big sales. You know, businesses get a big customer who puts in a big order, but it might take a while to get paid from that. So you really need
Mm.
to understand what's going to be the impact of
Yeah.
that on your you know, general accounts, your
That's
profit.
actually It's very interesting you say that, because as you're speaking, I can think of some sales that I personally have done that have ended up, you think an implementation is going to go for so long and will require X amount of resources, but then sometimes, there is additional customizations or things that mean it takes longer than you expected and the costs blow out on our end, or maybe, for some reason they don't finish the implementation and they decide to pull out. So there's all sorts of scenarios where we've had to change some of the way that we do sales to prevent that kind of thing from happening again.
Yeah.
And this kind of goes to like the strategic planning session component of how to improve your sales process to avoid engaging in behaviors that can minimize your profitability. How often would you say is sort of the best practice for conducting these kind of analyses?
Well, I think at least yearly, and I think every business at least once a year should be doing something called a SWOT analysis, which is
Mm.
strengths, weaknesses, opportunities, and threats. So, we all trundle along in our business, experiencing what goes on. We learn as we go along what works and what doesn't. And I think it's a great opportunity to get your whole team together and it's a very positive way of looking at things. So, rather than whinging and complaining about things, get everybody in a room, get the coffee machine going, and big whiteboard, whatever, and just brainstorm. What are you good at? What are your strengths? What are your weaknesses? Where could you use improvement? What are the opportunities? And how can you take advantage of those? And what are the potential threats? And how can you mitigate those? So, if I think that's a really good place to start. And then when you've worked that out, then prioritize them. What is costing us the most? What are we missing out on the most? Or what is costing us because we're not doing it well enough?
And
And
this is a good segue to sort of understanding what really goes into cost, because I think like the thing that maybe is most ambiguous to me is the overhead side of things, because it's sometimes intangible. But what would you say is like the way that you would recommend people undergo cost optimization?
well, the first thing you need to understand is what is the true cost of your product or service. And it's something that very rarely gets done in a business. And it's just plain old boring number crunching, sitting down and working out everything that's involved in producing that product or service ready for sale. And so when I say true costs, I mean direct costs. So, for example, if you're selling a widget, the cost of getting that widget into store, the cost of getting it out of stock to the customer, or getting it ready for sale. And then all of your regular monthly overheads are separate from that because they're not directly related generally to the cost of producing the product or the service. So really, that is the first thing to know, because if you don't know that, how do you know how much to charge for your product or service? So you need to make sure that whatever you're charging covers that plus some, because you've got to factor in enough to cover your overheads plus a profit.
Mm.
So it's really a number crunching exercise from somebody who really understands what you need to take into consideration. And again, it seems like another cost, but at the end of the day, if you don't get it right, it's costing you big time. And we see it so often, loss-making projects that had they been, properly calculated right in the beginning, that could have been avoided. And I see it day in, day out. I look at CVs of CFOs and I see where they've saved literally millions of dollars for businesses because that's what they do.
Yes. So I guess sort of looking from that to I suppose like how to minimize costs. Can you tell us a bit more about like how to improve systems to optimize costs?
Well, the best way to improve your the way you produce things is to systemize it. And gosh, we're spoilt for choice these days with systems, aren't we? There's so many out there, and they're so inexpensive and accessible. So the more you can document your processes, then you've got a basis for constantly adding improvement. So we all learn as we go along. Nobody ever gets anything perfect on, word go. So it gives you an opportunity to keep improving that. It gives people something to follow. It gives them confidence in what they're doing in the business. And one of the biggest benefits of systems is to the value of the business, because an unsystemized business is not worth very much. When the business owner walks out with all the knowledge in their head, you can't sell your head. You really have to systemize.
Yes.
If you want to one day exit your business, you must systemize it.
That reminds me of this book I read. I think it was called The E-Myth, which was
Yes.
about how, these business owners, like they've got this system, but it's all in their head. They haven't really communicated it to anyone, and so they can't go on a holiday because if they
Mm,
leave, the whole thing falls apart in their absence.
that's right. Yes. Yeah.
Yeah,
Yeah. Look, it seems an expensive exercise at the time, but gosh, it makes your life so much easier. And as I said, your business more valuable. And
yeah.
the other way to obviously improve your costs is be constantly looking at alternatives and really understanding your marketplace, what new innovations are happening, how can you implement things like artificial intelligence, what new materials are available. Just you've really got to be constantly researching, because if you don't, your competitors are, and that's how they can undercut you on price. So you've really got to be looking at how can I minimize my cost as much as possible without obviously detrimentally affecting the service or the product. But at the end of the day, you've got to be profitable, and you've got to make a gross profit, because if you don't make a gross profit, you've got Buckleys of making a net profit.
Very true. So this sort of takes us to the other side of making a profit, which is pricing. So I suppose this is maybe the
Sorry,
thing that,
Laura. Can we just go
yes,
back to that last slide, because there
yes,
was an important point there that I didn't
yeah, sorry.
get to. The last one is labour hours, and this one is really important in terms of costs for particularly a service-based business. What you've got to sell is the time of the people who are delivering the service. So that my question to anybody in a service-based business is, are you selling all the hours that you're paying for? Because if you're not, I mean, look, okay, nobody can sell 100%. We're all human, we have to have holidays and sick days and go to lunch and that sort of thing. But if that's the asset in your business and that's what you've got to sell, then you need to maximize it. And so a bit of concentration on that really pays bigger dividends big time. We see it so often. We walk into businesses and we say to the business owner, how productive do you think your service people are? And they generally have a gut feel about it, but quite often when we actually sit down and work it out, they get quite a shock. And we actually had one client that we did this for, and he discovered that his people were only 50% productive, and he was absolutely
Wow.
horrified. So effectively, that meant he could have doubled his sales and probably even more on his profit. So then the question is, okay, what do we have to do? And it's not that those people didn't want to be productive. It was just that the environment was not geared up for them to be productive. So you've got to look at everything that's impacting that time that's available to be sold. What are they doing that's not billable, and change things.
Can you like outsource some of that to either automation systems, tools like ChatGPT, etc., so that
Yep,
they are freed up for more billable hours? Absolutely.
exactly. There's an old saying, don't have surveyors knocking in pegs. So, get cheaper alternatives to be doing those low value tasks. Don't have highly qualified, costly people doing things like that.
Absolutely. So just to go to pricing. So I suppose one of the things that I often think about is relating to like sort of trying to balance the cost that we've just been talking about with obviously the ROI that a customer is going to be able to deliver. So how would you suggest putting together a pricing strategy that keeps both of those concerns in mind?
Well, as I said before, really understanding your true cost. And then obviously you've got to compete with your competitors. So you need to understand what are their cost inputs. So really understanding your industry and your competitors, and really just being able to work out which are your best and worst products in terms of sales and profitability. And in terms of price increase, making sure that you do those regularly. So many businesses, they just forget. They don't diary it. And all of a sudden they find that, oh gosh, our costs have crept up and our gross margin has gone down. And so suddenly they find themselves having to do a big chunk of a price increase. When really, if you had done it regularly, year in, year out, it wouldn't be such a problem and not so noticeable. I mean, for
Yeah,
example, if you go to McDonald's, they are the masters at that.
it's
They
true.
they do it all the time. They don't advertise it. Most people barely notice it, but that's
Yeah,
how they remain profitable.
it's because like every so often they'll increase things by like 5 or 10 cents, but like regularly. And I think that's something, I've heard quite a few businesses where, they build in the expectation that over time you'll adjust prices according to inflation, at least,
Yeah, yeah,
so that if that happens, people are not, oh, why did you change the price? It's like, well, we knew that was going to happen. It's the building it in. Um,
yeah. And so long as you've got it written into your contracts or your terms of trade, then people shouldn't be surprised by it. I think the other important thing in terms of pricing is for businesses to understand your break-even point. And so what that means is, what do I have to sell to cover
mm,
my costs and my overheads? And there's a simple calculation for working that out, which you can get from our website if you want to go and have a look at it. There's a blog on it somewhere there. So effectively, it's what I have to sell to make neither a profit nor a loss, which is obviously not what anybody's aiming for. But what that does, once you know what sales you have to make, that gives you a baseline target, what I need to do to avoid making losses. And then you can start to tweak the numbers. So what impact would cutting my costs down a little bit make to that? What impact would a small price increase make to that? Or what impact would selling more stuff make to that? And oftentimes, a small price increase creates a much bigger improvement on the bottom line than selling more stuff. Because when you increase prices, the costs aren't going up.
yes,
The price increase is going straight to the bottom line.
that's
So,
true.
so really, giving some attention to your pricing can have a really positive impact on your bottom line.
Yeah, so sort of going to that, one of the things that I've encountered in my career as a salesperson is when people say, you've got a price that it needs to be this price because one, the costs for us, but also the ROI that we believe we can give to people. But they will say, for example, I've had people, say, why does ezyCollect cost more than zero, for example? And and so, how would you suggest that you explain that to people?
Because we're good. Because we're good at what we do. Look, I can actually give you a really great example of a client of ours. some while back over in Western Australia. It was a fencing business. I remember sitting down opposite this guy, and he was having a big whinge about the impact of competitors, mainly overseas. And I said to him, so how is your product different to the competitors? And he was in a fencing business. And he said, well, mine is far superior. And I said, how? Why? And he said, because it's better made, it lasts longer. And I said, oh, how much longer does it last than the competitors? And he said, oh, probably about 5 or 6 times longer. You know, if somebody goes and buys this cheap competitive product, they're probably going to be replacing it within 1 or 2 years. So I said to him, do you explain that to your customers? And he said, oh, yeah, sort of, you know, when I talked to them, but he wasn't really pushing that in his marketing. So I think it comes down to this saying, making the invisible visible. You know, why are you charging more for your product than your competitors? And it's all about the value proposition that customers perceive. If they perceive that, you know, that's valuable to me, I'm getting a good benefit from paying a little bit extra for this product or service, then it's worth my while. So, you know, what makes you different in terms of the value of your products and services?
Yeah, and I suppose like when I think of, you know, making the invisible visible, I'm thinking of maybe sharing success stories from clients that have had really good experiences, or, you know, making sure that you get testimonials regularly, that you are able to also do, depending on the type of business you do. One of the things we do at ezyCollect is we do every financial year with our clients is we'll do we'll run the data from the back end and we'll show them, hey, this is how your DSO improved over the year. This is how many hours we saved you. So we're like making it very clear, you know, how much value you are getting every year from us so they don't forget. Because
Yeah.
otherwise, yeah, I think that's
And you've got to quantify it, haven't you?
yeah.
You know, if it's time saving, how many hours are you saving times the cost of that person to do it? And plus, it's not so annoying to do because it's just done automatically and looked after, isn't it?
Yeah.
Constantly.
Yeah. So let's sort of go back to a cost side of things for a second. So overhead. Um I sometimes get and this is probably because I'm, you know, a salesperson, not a CFO, but like, yeah, explain to me exactly what's included in overhead. Does it include, say, like the cost of marketing your business as well, or is that still in like the true cost?
No, marketing would be included in overheads. So that would be one of the categories of overheads that you would include. So if you look at a typical profit and loss report, you usually see that things like marketing, office rent, office staff, accounting, you know, all those sorts of things, that the cost that you incur, whether you sell anything or not,
Right.
basically, I think is a good way to describe overheads.
Yeah.
And a large portion of that oftentimes is staff and premises occupancy. And with staff being one of the biggest ones, that's obviously an area that really needs to be well organised and well understood. And a great way to help you do that is to put together something called an organisational chart. And so what that does is it looks at who is in the business, what do they do, what are they responsible for, and obviously making sure that there are no gaps, that everything that needs to be done in the business is covered under those headings, and then having clear job descriptions for each person on that organizational chart. And in many small businesses, it starts out with one person, they're doing everything. So, you know, it sounds a bit crazy, but it's not actually a bad thing to do. If you sit down and document everything that you're doing, that's very helpful for when your business starts to grow, because you can't keep doing everything as a business owner. You need to start employing people to come and work with you And so, it's a smart idea to be able to categorize those tasks and make sure you get the right people in.
Yeah, a
And
lot of the, sorry,
sorry,
um,
no, go
a
on.
lot of the people that I end up speaking to, they're often in that sort of growth phase of their business where, the business owner is still, they're not doing everything all by themselves, but they're still wearing a lot of hats. So, they might be doing the accounts still, or they might be doing IT still, or something, or sales. Like, so it's like multiple things, but over time, they're sort of either looking at getting staff to replace that thing as they grow. But how would you do you have any ideas about like when to make the decision of like when does it become too much and when do you need to hire more people, or when should you keep trying to do things all by yourself, or use software to try and take over some of those things?
Well, look, I suppose when the business is getting to the point where it's growing or it's got growth opportunities, that hopefully you don't wait until the point where it becomes a situation where it's stopping you from growing the business. And I guess this is where sitting down and being a bit strategic about your business and your business planning, and this time of year, it's probably a bit past that now, but the new financial year is a really great way to be a time to be sitting down and looking at that and saying, right, what do I want to achieve this year? And then generally what happens is people do a budget or a plan or they set targets, but then they don't always have the operational plans to support those targets. So, I reckon I want to make $5 million turnover this year. The question is, how are you going to achieve that? As a business owner, you can't do that all by yourself. So you really need to start planning. Well, if we're going to do that, what need is that going to create for extra resources to achieve that target? And then start to plot it out. And so then you need to do your budget. You need to work out what sales I want, what costs are going to be involved in those sales, what overheads am I going to need to support those sales, what profitability are we likely to make. But then the real issue is the cash flow, because you can set whatever profit budget you like, but cash is king. If the cash isn't moving at the right pace, i.e., in and out, that can bring all of your targets unstuck. So
That's
you
a
have to understand, are we going to have the cash to pay for those
yes.
things when we need to?
That's a great segue into the next part of this webinar, which is about making sure the flow of cash, both in and out, is as streamlined as possible. So, Sue, what would you say be best practices for streamlining the customer payment side of things?
Subscribe to ezyCollect.
Thank you. I lined you up for that one. Um, So I guess like just I might just answer this one real quick. So this is something that ezyCollect is really designed to do. But I mean it's also a general best practice. You could achieve this same thing through other means. Obviously, we think ezyCollect's a very cost-effective way of doing it, but there's other ways that you could do all of what we've got on the screen here. So what we think is like best practice is when you're trying to optimize your accounts receivable and your cash flow coming in, it actually really starts on like who are your customers, because not all customers are good customers, especially if you're working in a business where you're selling on credit terms. Obviously, if you're selling cash, that's different. But if you are selling on credit terms, like sometimes like quite a lot of businesses, they just say yes to everyone that comes and asks for an account, and or they'll just do like some trade references and get minimal information, or they might have started working with a customer years ago and they've kept them on their books, but maybe the financial situation of that business has changed over time. So making sure that you have accurate information about the credit risk status of your customers is probably one of the first things you need to look at. And then I would say communication with the customer is key, like making sure that you're not delaying sending out invoices. It's shocking some businesses that I've spoken to where they say, oh, we don't send the invoice until like a week after, they've ordered. And it's like, well, why are you waiting? Why don't you send it immediately? Like, and it's sometimes it's because their software isn't set up to do it, or it's a very manual process. But the more you delay, and also the more you delay in like your collections effort, the more the customer's just going to be like, well, if no one's chasing me for the money, of course I'm going to keep it for as long as I can. It's a good excuse for me not to pay yet. Like they're going to take as much advantage of it as they can, because of course they're trying to manage their supply side of things. One of the things when we say proactivity in collections is starting to communicate with the customer before an invoice is due. So don't just start chasing them once they're overdue. You can send a little pre-reminder to them saying like, hey, just wanted to check you've got your invoice. There are no issues. Your payment needs to be made in 2 days, for example. And we've actually, like from our statistics, we found out that about 30% of invoices can be paid before the due date if you do that, because a lot of the times, like a late payment could be due to, oh, I just didn't get the invoice copy, or like, oh, there was a delivery delay, or like all these reasons that if you addressed it earlier, there's no reason for them not to pay now. And so they do. The other thing is like making it easier for the customer to do the right thing, because in these smaller businesses, when you are, where it's like the customers of let's say a wholesaler, they're small businesses themselves, they might be owner operators, they're busy all day with their own business, and then they don't have time to be going into their bank and logging in and doing all these friction steps. And so if you remove the friction from it, if you make life easy for the customer, make it just the simplest way for them to pay you, they're going to do it. And so that's probably one of the most important things. And having something like an easy way for them to pay is key. Just having consistency in communications. If you have an ad hoc sort of chasing process, if you only start chasing 30 days after they're overdue, or 45 days, if you only chase the really expensive, like the really big accounts, and then the little ones you maybe get to in 60 days, like all of these things are going to affect the cash flow that's coming in. And also just making sure that you actually know, has an invoice been paid or not, because sometimes, you'll see these random amounts of money arriving in your bank account and there's no reference number or no invoice. So you're sort of like, which customer was this? I don't know. Like it could have been one of 5. And so they're sort of all with this question mark on them. And so if you can tighten up this whole process, you will be able to drastically improve the cash coming in, which then will really help you with your costs. So then from this sense, Sue, let's talk about the other side of it, which is the AP side. This is not something ezyCollect really focuses on. So what would you suggest as the best practice for tightening up AP?
Well, I think the first thing is don't ever pay cash on delivery if you can avoid it, because really accounts payable is the flip side to accounts receivable. If the number of days that customers are taking you to pay, every day they don't pay, that money is not in your bank account. On the flip side, every day that you pay early to suppliers, again, that's money that's not in your bank account. So
sort of like a contest between suppliers and customers, right? Everyone's wanting to get their customers to pay early, but also to not pay early to their own suppliers.
That's right. It's a big game, really, isn't it?
Yeah.
And look, within reason, we've got to play this game, but you've got to be smart about it. So really, it's just about shortening that gap as much as possible in the time that customers are taking to pay you and you're taking to pay your suppliers. So you want to just try and get the best possible terms from suppliers that you possibly can, but not without agreement. So not just stringing suppliers out, because then they start to lose confidence in you as a customer, and then they do start demanding cash on delivery and holding up supply and things like that. But not doing this really begs the question, if you're not managing your accounts receivable and your accounts payable and shortening that gap, where is the money going to come from to fund that gap? And it either needs to come from lending from a bank or business lender, or from the business owner, usually is where it comes from. So if you want to minimize that, really the best way to do it is to manage this whole cash cycle that we've mentioned here, and
Is there,
work out a way.
yeah, sorry, is there a buffer sort of amount that you would suggest to have, like maybe an extra month's worth of cash flow or 2 weeks worth or something that is best practice, or does it just depend on the business?
Look, it really depends on the business, and that's where a cash flow projection comes in really handy. So if you can sit down and plot it out just in a simple spreadsheet, what am I owed by customers? When are they likely to pay that? What sales am I going to be making for the next 12 months? What are my costs and my overheads for the next 12 months? And you need to include everything in that, not just sales costs and overheads, but taxes, dividends, money's paid out for equipment, things like that, that might not be in your profit and loss budget. So you need to understand what all of those costs are going to be, and factor in the timing, because the timing of cash is quite different to what you can see in the budget. So your cash flow projection, if you plot it out accurately and you measure it regularly and you adjust it regularly, because nobody ever gets it 100% right first go, it does start to give you a much better understanding of the nature of your cash flow situation, so that you can be pre-warned. You can see when issues are going to come up, and therefore you've got more time to deal with them, whether that be trying to speed up your payment from customers, or get extra time from suppliers, or get some lending into the business, or cut some costs, or put your prices up, or whatever it might be. It gives you a lot more control and confidence, I guess, in the situation.
Yeah, so just in the interest of time, I know
Mhm.
we could chat about this all day, but I wanted to ask you a little bit about um, how to minimize inefficiencies in stock management. So how do we make sure that we've got the right amount of stock in our warehouses?
Look, systems are the best way. So I can't emphasize enough the value of a really good stock system. And look, standard stock in accounting systems, general accounting systems, is generally fairly basic. So really, if you're any kind of sophisticated stock movement business, you really need to have a good sophisticated stock movement system, because that removes the guesswork and the ambiguity. You can start to get a history of what stock is moving, what isn't, what's profitable, what it's costing you, what return are you getting on each item, and just really helps you to avoid a situation where you've got too much stock or not enough. It's really a fine line. And I think, as a business owner, if you can think of stock as dollars piled up on the stockroom floor, you really want to have that money sitting there for as little time as possible, because every dollar that's tied up there is a dollar that you can't use for other things in your business, whether that be faster moving, more in demand products, or marketing, or more resources to sell more. You really must manage that to optimum levels.
Yeah, and some of the stock would depreciate over time, right? Because they might become obsolete and they might be newer versions that would sell better
Mm,
yeah.
mm. Yeah, well, I've
Um,
got a great example actually of that. We had a client over in New Zealand who was selling, they were in the rag trade. So they were selling sort of modern, youthful type clothing. And we said to them, you seem to have quite a bit of obsolete stock here, or excess stock. Is there a way that you can, turn that back into cash? So that was 1 month. And the next month when we went back, they had done that. And what they did was they just ran some ads on social media. They were outside of Auckland, and they hired a school church hall in Auckland. They put all the stuff in a truck, they drove it up to Auckland, and they came back with $30,000 worth of cash. And they just got rid of it, turned it back into cash, and that was cash that they had then to do other things with.
I love it. I guess for a service-based business rather than stock-based, sort of, you say a couple of words about the job management side of things.
Yeah, look, really, systems. I know I keep saying systems, but systems really make it so much easier and help you to eliminate problems, because systems provide a template for delivering things more easily. And they provide a place to absorb your learnings. You know, we don't always get things right in the beginning, but if you've got a system, everybody's involved in updating the system, using the system, you know, working from it. It just makes everybody's life so much easier and keeps track of everything. So, you know, if you're a service-based business, you can put your quotes into a job management system. You can put in all your actual costs, your labor and your materials, and then you can compare at the end of the job, how well did we quote that job? You can see profitability by job. Did we actually make money? And use that as a way to be constantly improving what you're doing. And again, you know, adds to the value of the business.
And there's quite a lot of good both job management add-ons and stock management add-ons for even software like Xero, right?
Yep. Yeah, absolutely. And again, you know, they're not horribly expensive. And if you work out the return on investment in terms of profitability on your jobs and the removal of headaches and hassles by having it in a system, it's a no-brainer. And not to mention the value onto your business.
Yeah. So I know we are slightly over time. So just to would you be able to give a 60-second summary of what you think the most important things are for businesses to keep in mind for profit maximization?
Yeah, well, these points here really, I think if you can have a look at your situation and just have a think about which ones, how much impact it might be having on your profit and your cash flow. So have a look at your sales. What difference could it make if we were able to make some of these sales more profitable? Closely look at your costs and really understand your true cost and work at minimizing them. Look at your pricing. You know, is it time to increase your pricing? And it's not necessarily to increase the price of everything. Some goods or services might be a bit more sensitive to price.
Hello? Casey,
Yes.
is it my internet that's a problem, or
To
Sue's
decrease
internet?
Oh, there you go. I think
the
it's
price comes off the bottom line.
Sorry, Sue. I think you broke up there for a second.
Oh,
Can
where
you
did I
hear
get
me?
to? Yeah, I can hear
I
you.
think you're talking about overhead controls.
Overhead controls, yeah.
Yeah.
Look, again, just sit down, take an hour or two to look at every overhead and ask yourself, do we really need to be spending this money? Is it contributing to the business? And be brutal. You know, in this day and age, you cannot afford to just have money flying out the window. You've got to be brutal to keep your business going and profitable, and get your customers to pay more quickly. Slow down your payment to suppliers in agreement with them, obviously. Think of your stock as dollar bills on stockroom floor and have as little cash sitting there as possible, while still having obviously the goods to sell to customers. And with your jobs, just make sure that you systemize them, you run them as efficiently as possible, and you get them finished as quickly as possible so you can invoice them and get paid faster. So if you can, put in place just a bit of focus on each of these areas, then at the end of the day, in 12 months' time, I guarantee you will have better profit and better cash flow.
Yeah. Absolutely. Thank you so much for sharing all your wisdom with us today, Sue. Now, to everyone that's still here, I know we are a couple of minutes over time, but Sue does have a giveaway to give to you all. So if you're okay to stay for just a couple more minutes, we're going to do the Q&A now, and then Sue's going to tell you about like the free giveaway that she's got for you. So I can see we've got a question here that says, how come the profit and loss report shows that we have made a profit, but there isn't enough cash to pay for everything?
Wow, if I had $1 for every time I'd heard this question, I'd be a rich woman. Well, look, it all boils down to what we've been talking about today, doesn't it? You sell something on day one, but if it's a product or, well, even a job or a service, you've actually had to pay for that often before you've sold it. You've had to get the goods into store, or you've had the job in progress for a while, incurring costs until the time that you actually invoice it. And then your customers take time to pay, unless you're using ezyCollect, of course. And so it's all about timing. So the profit and loss report shows the sale less the costs that are involved in that sale, less the overheads, and then a profit. But the fact is that the timing of the cash is very different. The money for the sales doesn't come in for some time. However, the costs for the costs do come in oftentimes before the sale is made. And the big problem with that, well, firstly, it is a problem because if you haven't factored in the amount of working capital that you need, i.e. the cash to handle that situation, what really becomes a problem for many businesses is when they start to grow. Because if it's a problem now when the business is small, the more you sell, the bigger the problem gets. And that comes as a bit of a shock to a lot of businesses. They're doing all this stuff, being really busy, and it all seems great, and they're seeing the profit, but they're really struggling with the cash side of things.
Absolutely.
I hope
That was one.
answers that question.
Yeah, absolutely. Any other questions? I think if anyone has any further questions, feel free to put them in the chat, but we will talk about what Sue's got for you all. So, Sue, you've got an ebook for everyone, right? Tell us about that.
Do. Yes, so we summarised really those key points that have the impact on the profit and the cash flow, but we've got a lot more detail for you in this ebook, 9 smart strategies to improve your profit and cash flow. So if you'd like to go to our website, cfoncall.com.au, and go to our download section, or ebooks, I think is what's in the top menu, there's lots of books there about all aspects of financial control for business owners. But this one, I think, nicely summarizes what we've talked about today and gives you some action points to be able to implement those changes.
Yeah. Well, thank you so much. I'll be sure to download it myself. And yes, as Casey said, we will share this email with and the ebook link to everyone as well.
Yep.
So just finally, if you're interested in having Sue help your business directly, I personally have spoken to a lot of businesses that use CFO On Call, and it is really revolutionized their business. So if you are interested, yeah, Sue and ourselves will be able to send you a special offer, and you'll be able to book in for a business finance health check as well. As for myself, I would love to hear from anyone who is interested in the accounts receivable side of things. So if you would like to have a more in-depth chat with me about how to get you paid faster, I would love to do so. And you can reach me on LinkedIn. And I think my email address will also be in the follow-up email that we'll send after this webinar. So thank you to everyone who has joined us today. Thank you so much, Sue. It's been a real pleasure chatting with you.
Pleasure. Thanks, Laura. Thanks for the opportunity. And I wish everyone a fantastically profitable financial year this year, with good cash flow, of course.
That's right. Absolutely. All right. Thank you, everyone. And I
Thanks.
appreciate
Bye.
you staying back. All right. Bye.
Bye.